Okay, so we just completed the accounting treatment for revaluation. So if you do revaluation, it's either a gain or a loss. So we say the common thing, I think you know how to react. The only thing is the P&L. Okay, now next is the next one. We completed the first one, how to account for revaluation. Next one is treatment to accumulated depreciation. Okay, now, so if you remember just now I say what you did is a shortcut. Okay, so normally, remember our double entry for revaluation is debit PPE, for example, and credit your revaluation reserve. Okay, so I say this is actually a shortcut. Okay, this double entry for revaluation is actually a shortcut. Why I say it's a shortcut? Because if you take a closer look, right, this is a shortcut because it does not contain accumulated depreciation. Right? So the one that you just did, right, debit PPE, credit RR is actually a shortcut. Why I say it's a shortcut? Because it does not contain accumulated debt. So technically speaking, when you account for revaluation, you should also account revaluation in accumulated depreciation account as well. Okay, so that's what we are going to do now. Okay, so this is called treatment to the accumulated depreciation. Right? Okay, so remember when you account for revaluation, you should also amend your accumulated depreciation account as well. Okay, so there are two ways to account for this accumulated depreciation when accounting for revaluation. The first one is you can do it by restating it proportionally. Okay, you can restate the accumulated depreciation proportionally, or you can eliminate the accumulated depreciation completely. Okay, so two ways to deal with your accumulated depreciation. One is to restate proportionally, and the other one is to remove it. Eliminate means remove it. Okay, so of course, one note here. So you got two ways to do it. So as I say, if the question is silent, right, then please choose eliminate completely. If question is silent, okay, if the question did not tell you which method to use, then choose this eliminate completely. Okay, so that's what I'm trying to say. If the question is silent, choose this method, eliminate completely. I will show you how to do it. Okay, so this is an example. Following is only property owned by XYZ. Cost 1,000, accumulated debt 200. So okay, then from here, I think we are able to calculate the carrying value is 800. No problem, correct? Then I say the property was valued at 1040. This is the fair value. Okay, so of course, firstly is you need to determine whether this is a revaluation gain or a revaluation loss, right? Okay, so we have the numbers there. Carrying value is 800. Revalue amount is your 1040. Okay, then of course, the reserve, right, is a revaluation gain, 1040 minus 800. I will get 240, right? Okay, I will get 240. This is my revaluation reserve, which is also the gain, right? So the thing is, how are we going to account for this gain? Incorporating accumulated depreciation. Okay, so remember I say there are two methods. One is to restate proportionally, and the other one is to eliminate completely. So two methods to it. right? Okay, so let me show you how to do it. So do the first one first, restate proportionally. So your RR, right? Credit RR definitely must be this amount, 240. Okay, so of course, I think you know how to get this credit RR 240. So my task is to show you how I obtain this debit PPE and credit your accumulated DIP 60, right? Okay, how to get this. So I'll show you here. Okay, so let's say, of course, from the question, we all know the cost is 1,000 from the question, right? Cost is 1,000. Then accumulated DIP is 200. Right, then therefore here I will have a carrying value of 800. Okay, so we know our asset increased by 240. Right, increased by 240, then of course resulting in 1040 here. Okay, right. So nothing special, all from the question, right? 800 increased by 240, resulting in 1040. Okay, so just ask you one question. So we know the asset increased from 800 to 1040, which is an increase of 240. I want to express this 240 in terms of percentage. Okay, so if I ask you asset increased by how many percent? From 800 to 1040 is how many percent? Can do a simple mathematics. So asset is increased by how many percent? From 800 to 1040. Okay, so this 240 is how many percent? So 240, oh yeah, 30%. Thank you. Right, 30%. You're right. Okay, so it's increased by 30%. So very simple. This is increased by 30%. So restate proportionally means the same. It will increase your cost by 30%. It will increase your accumulated DIP by 30%. Okay, right, then I just do accordingly. 1,000 times 30%, I will get 300, correct? Okay, I will get 300. Then 200 times 30%, I will get 60. Okay, right. So of course, if I want to increase my cost, my double entry must be debit PPE. If I want to increase my accumulated DIP, my double entry must be credit accumulated DIP. Okay, then that's how I get this number. Hopefully, you know how to get this number now. Okay, right. So ultimately, after that, let me have the conclusion. So 1,000 plus 300, I will get 1,003. Then 200 plus 60, I will get 260, right? So if you use your 1,003 minus 260, I think you get your 1040. Okay, so this is how you do it if you are using restate proportionally. Okay, then now we move on to the next one, eliminate completely, right? So for eliminating completely, right, there's a shortcut. In your exam, you can apply a shortcut. Shortcut means just do it, don't care, right? Okay, shortcut means just do it, don't care. So I show you what is the shortcut. If you just want exam speed, you can just do something like that. Okay, what I put here is a shortcut. Okay, so very simple. You still need to determine the revaluation reserve, your asset increased by how much, right? So in this case, the asset increased by 240. My credit will still go to my RR 240. This one you still need to do it. Okay, credit RR 240. Okay, now this method is about eliminating your accumulated depreciation completely. Okay, this method is about eliminating your accumulated depreciation completely, right? So this is a focus. So if I want to remove my accumulated dip, definitely I will need to debit my accumulated dip. Correct? The method name is remove it completely, right? So to remove means to say I need to reduce, also means to say I need to debit. So I just see how much is my accumulated dip. My accumulated dip is 200, correct? I remove it totally. So I will know I need to debit my accumulated dip 200. Okay, then of course, balancing figure, I will throw it to my PPE. Your PPE will be a balancing figure. Right, so in this case, that will be a 40. So you can see this is the shortcut I'm talking about. So if you just want speed, right, you don't want to understand so many things, then this is what you should do. The shortcut for eliminating accumulated dip completely. Right? Okay, then of course, if you want to understand the double entry, I will show you now, okay, just for understanding purpose. Eliminating completely. Right, okay, so similarly, I will have the same diagram, cost, accumulated dip, and then carrying value, 1,200 and 800 here. Okay, right, then of course, we all know the asset increased by 240. Okay, then of course, the same thing, I will get back 1040. Okay, now, so remember the name of this method is eliminating accumulated depreciation completely. This is the name of this method, eliminating accumulated depreciation completely. So to do so, right, I will need to debit my accumulated dip. I have to remove it totally, right? So I need to debit accumulated dip 200. Okay, then now we have this problem. The problem is this. If I debit accumulated dip, what is the impact on the asset? If I debit accumulated dip, what is the impact on the asset? I give you two choices. If I debit accumulated dip, asset increase or decrease, right? If I debit accumulated dip, asset increase or decrease. What do you think? If I debit accumulated dip, asset increase or decrease? You got 50% chance. Increase, correct. That's the correct answer. Okay. So anyway, if you can't see, then I prove it to you. Okay. Evidence that debiting accumulated dip will increase asset. Okay. So this is the evidence. I just show you the evidence. Right. So everything remains the same. The only thing is I go and debit my accumulated dip. Right. So here I will just debit accumulated dip. So say maybe by 50, right? The rest, there's no change to the rest of the information. So my cost will still be at 1,000. Okay, by debiting accumulated dip 200, then I debit 50, so now become 150. So do you see the value of my asset now is at 850. Okay, so can we have this conclusion now? If you debit accumulated dip, asset will actually increase. Asset will increase. Okay, can see after I debit accumulated dip, my asset from 800 become 850. So asset has increased. So understand this conclusion. Evidence that debit accumulated dip will increase asset, right? So if you debit accumulated dip, the implication is your asset will increase, right? Okay, so remember this. So therefore, by debiting accumulated dip is have the same effect of increasing your asset. So the remaining asset to increase must be 40 here. Okay, because debiting accumulated dip is increasing asset, right? So therefore, I will debit a PPE here, right? Then end of the day, what will happen? 1000 plus 40, I will get a 1040. Then my accumulated depreciation will become 0. Okay, so can see your accumulated depreciation. Let me just draw one line straight here. You see your accumulated depreciation after this double entry, it will become 0. So means to say your accumulated depreciation will restart. Okay, after incorporating this double entry, after revaluation, in other words, means to say your accumulated depreciation becomes 0. Remember this, right? Okay, accumulated depreciation becomes 0, everything restarts. Yeah, right. Okay, next. This is more clean now. Of course, in practice, next time when you work, if you need to remove your accumulated dip, I would suggest you to choose this method. Eliminate completely, right? Everything remove, everything restart, more clean, right? Don't use this method. This method still got balance left, okay? Become quite messy. So this is the recommended method. Okay, then next we need to do something called a depreciation of a revalue asset. Okay, just to show you where we are now. Okay, so we have done this, then we have done this. Now is depreciation of a revalue asset. Nothing special. The thing is, my asset has been revalued before. Okay, asset has been revalued before. So that's why they say depreciation of a revalued asset. This is the difference here. Asset has been revalued before. Okay, that's why it's called revalue asset. So depreciation, how will you do it? Nothing special. Normally, for depreciation, we use cost minus scrap divided by useful life, correct? So of course, now I do not use my cost anymore. After I do my revaluation, obviously, I will not use my cost anymore. I will use the fair value at date of revaluation. Okay, then minus any new scrap value, if any. Okay, then of course the same thing, I will divide by what? I will divide by new useful life, if any. If no, okay, then I will use remaining useful life. Okay, so of course, this is the one that is quite similar to what we see earlier. This is a divide line. Okay, the only difference is instead of using cost, I don't use my cost anymore. I will use the fair value at date of revaluation to calculate depreciation. Okay, so that's how you calculate your depreciation of a revalued asset. I don't use my cost anymore. I will use the fair value at date of revaluation. Okay, then for reducing balancing method, okay, then what you will do, of course, is I will not use the cost again, right? For reducing balancing method, then I will just use the percentage given, okay? Then multiply same thing by the fair value at date of revaluation. Okay, so end of the day is I do not use my cost anymore. I will use the fair value at date of revaluation. Okay, so that's what you should do lah, if you want to calculate depreciation of a revalued asset. Okay, which is quite logical. After you do revaluation, obviously, I will not use my cost anymore. If you still want to use your cost, then what's the point of doing revaluation? Okay, right. So that is this part on depreciation of a revalued asset, right? Depreciation of a revalued asset. Okay, now the next point is transfer excess depreciation from revaluation reserve to retained earning. So if I look at this English, right, it means I need to transfer from revaluation reserve to retained earning. Okay, I want to transfer from revaluation reserve to retained earning. Okay, now, so this is a process. So I have to tell you the situation. Now, firstly, it's important to note is you may transfer balance from your revaluation reserve to your retained earning. So the keyword is, I want to say, is you may transfer. May means it's optional for you to do it. You decide yourself, right? May means optional. If you want to do it, you do it. If you don't want to do it, up to you. So actually, this one depends on your company policy. All right, so depends on your company policy. You have a choice whether you want to do this or not. Okay, may transfer balance from your RR to your RE. Whether you want to do it or not depends on your company policy. Okay, so bear in mind is may. So as you can see, is transfer from RR to RE. Okay, transfer from RR to RE. So there are two parts to it. First thing is transfer how much, right? Transfer how much. Then, of course, some will ask why I need to transfer. Okay, so let me solve this part first. Let me do how much you need to transfer. Then later I will explain to you why you need to transfer. Okay, so now for this double entry, right? Very simple. Transfer from RR to RE. So by reading this sentence, right, I will know my RR will drop, correct? Because it's transfer from RR to RE. So of course, I will also know my retained earning will increase. Okay, right. So if I just based on this, right, I'll be able to know my double entry. Reserve drop. If reserve drop, you will debit, right? So therefore, I will debit my revaluation reserve, RR, correct? Then my RE will increase, so I will credit my RE. So this is the double entry, transfer from RR to RE. So the next thing is how much, right? So I will show you how much. Okay, so to calculate how much you should transfer, right, you need to calculate two depreciation. One is depreciation using revaluation model, and the other one is depreciation using cost model. Okay, then let me ask you one question. Usually under normal circumstances, depreciation using revaluation model is higher or depreciation using cost model is higher. Okay, so let me repeat again. Under normal situation, depreciation using revaluation model is higher, or depreciation using cost model is higher. Okay, so I give you a clue, very simple. So let's say, for example, I bought a building 20 years ago, right? 20 years ago, I bought the building is 100,000, right? I'm using cost model, right? Starting that time. Then now I decided to revalue my building. So 20 years ago, my building is worth 100,000. So 20 years later, right? How much do you think my building will be worth? Definitely higher, right? If I do a revaluation, my building definitely is worth much higher than 100,000. So based on that figure, when I calculate depreciation, will I get a higher or lower amount? Okay, so back to you now. So just now my question to you is, depreciation using revaluation model is higher or cost model is higher under normal situation? What do you think? Which one is higher? Revaluation model or cost model? Which one is higher? Normal situation. No reply. Revaluation model, correct. Okay, under normal situation, revaluation model will provide a higher depreciation. Okay, very good. Okay, so for example, higher lah, just put one number, 110. Okay, then cost model maybe 100. Then a difference of 10. Okay, this 10 will be the amount you will need to transfer. Okay, so now I hope everybody know how to transfer how much. Okay, so how much to transfer, compute to depreciation, one using reversion model, one using cost model. The difference will be the amount you transfer. Okay, next is why you need to transfer, right? Okay, so if you are interested why you want to pass this double entry, I will show you why. Okay, now actually you already know why. Okay, let me just fast forward. This double entry, right, is actually a solution. Okay, is actually a solution. Okay, it's a solution to the disadvantage of using revaluation model. Okay, understand. So the reason why you pass this double entry, right, is actually a solution. What solution? Solution of disadvantage of using revaluation model. So in other words, mean to say, if I'm using revaluation model, right? If I'm using this revaluation model, I will have some disadvantage. Can see? If I use revaluation model, I will have disadvantage. To solve this disadvantage, I pass this double entry. So that's what I meant. Okay, and so if I use reversion model, I will have some disadvantage. So to solve this disadvantage, I will need to pass this double entry. Okay, so obviously you need to know what is the disadvantage of using revaluation model. Okay, so actually you already know. Okay, I just explain to you. Depreciation under cost model or reversion model, which one is higher? So this one you already know. Cost must be revaluation model. Okay, right. So very simple. Depreciation using revaluation model, right? If I use revaluation model, I will have higher depreciation. If I use revaluation model, I will have higher depreciation. This is the result, right? I will have higher depreciation if I use revaluation model. Then very simple. If I have higher depreciation, of course, that will result in lower dividend. Robert, skip one step. Lower profit. Correct? If I use revaluation model, the result is I will have higher depreciation, resulting in lower profit. And eventually, if I have lower profit, it will lead to lower dividend. Okay, then very simple. Do you still want to use this model? If I use this model, I will have higher depreciation, resulting in lower profit, resulting in lower dividend. Do you still want to use this model? Nobody will use, right? Definitely. Remember, I told you at the start, you have a choice. You can choose whether you want to use a cost model or a revaluation model. If I use revaluation model, I get lower dividend. Then what for I choose this? Right? So quite important. If you have lower dividend, you know what's the implication. You can't pay your shareholder dividend. Then your shareholder will not be happy with you. Right? If they are not happy with you, then you can't be the director anymore. Can see? All right. So understand this situation. If I choose revaluation model, will result in higher depreciation, resulting in lower profit, and eventually result in lower dividend. Then what for I choose this? So therefore, I need to have a solution, right? Okay, I need to have a solution. Okay, so the solution is to pass this double entry. Right, so now we talk about the solution. So solution is this. So the problem is I have a lower dividend, right? So let me ask you one question. Dividend deduct from which account? Dividend deduct from which account? Any suggestion? Dividend deduct from which account? Retained earning, correct. Okay, so very simple. The problem lies on your retained earning. So obviously, if I want to increase my dividend, I will need to increase my retained earning account. So therefore, retained earning, I will need to increase it, right? Okay, then I will solve the problem, right? So solution is I need to increase my retained earning. So therefore, I will need to credit my retained earning. So can you see the double entry now? So hopefully you understand the meaning of this double entry. Okay, the meaning of this double entry is if I use revaluation model, I will get certain disadvantage, right? Which is lower dividend. So therefore, I need to counter this disadvantage by passing this double entry. Okay, right. So that's this part on transfer excess depreciation from RR to RE. Okay, then the next part is disposal of a revalued asset. Okay, so the keyword here is your asset has been revalued before, right? Disposal means sell your asset. Okay, disposal means sell your asset. So the complication is your asset has been revalued before, right? Okay, revalued asset means to say your asset has been revalued before. Okay, so I put here, it means asset has been revalued before. Okay, so that's the meaning of revalued asset. Asset has been revalued before. So now I'm talking about selling an asset that has been revalued before. Okay, so disposal, I think, is a clear cut. You need to determine the gain or loss, like what we normally do to determine gain or loss. There's another step that you need to do if your asset is revalued before. The step you need to do is to transfer any remaining balance in your RR to RE. Okay, so this is the additional step you need to do, right? Which is transfer any remaining balance in your RR to RE, right? If your asset has been revalued before. Okay, right. So I think this step is also quite common sense, right? Quite common sense why you need to do this. I just give you one scenario. You just imagine if I do not do this step, what will happen? Right? My asset has been revalued before. Means to say, I have some balance in my RR. I have some balance in my RR relating to this disposed asset. If I don't remove it, right, what will happen? Okay, if I don't remove it, what will happen? Okay, so if I don't remove it, means to say the balance is still in your RR account. Okay, it will still be there. Okay, then 10 years later, right? 10 years later, somebody asks you, what is this balance of 10,000 in your R account? What is it relating to? Then what do you think will be your reply? Do you think you can tell that person, oh, this RR relates to an asset I disposed 10 years ago? So it doesn't make sense, right? So as I say, if let's say if I don't remove it, right? If I don't remove it, it will still remain in your SOFP. If I don't pass this double entry, if I don't remove it, it will still remain in your SOFP RR, $10,000. 10 years later, it's still here. Okay, it will still be here, after 10 years. If I don't remove this, right, 10 years later, it's still here. Right? If I have any existing balance in my RR, then somebody asks you, what is this 10,000 about? You can't be telling this person, this RR is relating to an asset I dispose of 10 years later. So it doesn't make sense, right? So therefore, very automatically, you will need to remove it and hide it in your retained earning. Okay, so retained earning, I would not say transfer. Usually, I think everybody here know it's a industry challenge. Now, we can't liquid paper. Accounting wise, right? I cannot say, oh, remove it. Remove it means to say, oh, just cancel. Liquid paper off. Okay, we know everything works by double entry. I can't just liquid paper off this number. I need to hide it somewhere. Hide, I say hide. Hide. Camouflage somewhere. So which account is the account you will camouflage? Everybody will know the account is retained earning. Camouflage inside here, right? Then next year, nobody will know. Correct? This is an industry, I think everybody know, right? You hide everything here. Then next year, nobody will know anymore. Okay? So that's why I use the word camouflage. If you can't hide in any account, because any account, it will still appear in your balance sheet, that kind of thing. Retained earning, don't you agree, is the account where they hide all the things there? So next year, you can't tell anymore. Disappear. Can see? Right? So that's why if your asset has been revalued before, right? If you still have any balance in your RR relating to this disposed asset, you need to pass this step. Transfer remaining balance in RR to RE. Hide, camouflage in your retained earning. Okay, so as I say, it's common sense. It's the same as our day-to-day life. If you break out with your boyfriend or girlfriend, do you still keep your girlfriend picture all over the place, put inside your house, then let your wife see? No, right? If you break off with your girlfriend, you will throw away everything that's relating to your girlfriend, correct? You will not keep, right, and put inside your house and let your wife or husband see. Doesn't make sense. So I think it's the same logic. Okay, so once you dispose of something, everything that's relating to the disposed asset, you will need to remove it. Okay, right. So the only thing in accounting is we can't liquid paper. We can only camouflage or hide in this account called retained earning. Okay, right. Okay, so the gain or loss, I have nothing to explain to you. This one is what you have learned in your earlier study, right? Gain or loss, I got nothing to explain to you. Then the other one is transfer remaining balance in R to RE. So this one is the same. You will debit your RR and credit your RE, right? Okay, so that's it. We have completed our first chapter, IAS 16. Okay, so every time when we complete one chapter, IAS 16, right, obviously you must know what are the important things you need to know. Every chapter, just ask yourself, what are the important things that you need to know? So for IAS 16, what have we learned? Right? Okay, please don't tell me nothing. Right? IAS 16, what have we learned? If you remember from the start, we talk about initial cost. Correct? Initial cost. Initial cost, of course, is our ABC. Correct? A means the cost at point of purchase. P means any cost incur before first use of the asset. Then C means future dismantle cost. Okay, so initial cost A, B, C, something like that, right? Okay, then next we talk about subsequent expenditure. Remember subsequent expenditure? So if you remember the story I told you, it means you spend money on existing asset. Spend money on existing asset. Two things can happen if you spend money on existing asset. First, improvement. Second, no improvement. If there's improvement, then accounting treatment is capitalize and depreciate. If there's no improvement, expense off. Right. Then the next thing we talk about is change in depreciation estimate. Correct? Okay. So change in useful life, change in residual value, and change in depreciation method. And lastly is revaluation model. So these are the things that are important in IAS 16. Okay, so I think I have also given you some revision notes. Okay, do you see there's a revision summary notes? Of course, this one is to let you know what you need to know. So after you complete one chapter, right, this is what you need to know. You see there's a revision summary notes, right? So all these are very short. You see, I only have 46 pages. So these are the things that I have already identified for you. So if you look at IAS 16, right, there, you see, these are the summary points. Initial cost, subsequent measurement, change in depreciation estimate, and reversion model. So initial cost is ABC. Subsequent expenditure, improve or no improvement. Right. Then next we have the change in depreciation estimate, what I need to do, and revaluation model. Then no more. Do you see? Only 2 pages. Right? Okay. So this is something like a test for you. So after we complete one subject, right, you need to ask yourself, initial cost. Okay, of course, you can't refer to the notes. You need to ask yourself, initial cost, what is it about? Okay, then you need to tell yourself, or ABC. Then subsequent expenditure, what is it about? Just a brief point. Okay, so this is something like a stop, a peak stop for you to see whether you have learned everything well in IAS 16. Okay, right, just to let you know, that's the revision notes. Okay, then now what we're going to do, of course, we are going to do some question. We need you to refer to your workbook. Okay, so this workbook is divided into 2 parts. One, of course, is the question, and the other one is illustration, our class illustration. So I think the class illustration is all the way at the back. So you look from the back now. Okay, you turn from the back, you will see a class illustration. Okay, I think, do you see, if you turn from the back, then you will see a class illustration. Right, it's 302. So these are the questions that we'll be discussing during the class. Class illustration 302. Okay, right. So the first question that we are going to do is this question called flight line. So take some time to read this question. Sad to tell you, this question is a little bit hard. It's on your page 303. So please read this question. Workbook 303. Okay, right. So if you read this question, Flightline is an airline which treat its aircraft as complex non-current asset. The cost and other detail of one of its aircraft are as follow. Okay, so to me, I don't really care about how they classify the aircraft. So to me, I think there are three category of asset. That's all. Right, three category. One is called exterior. One is called interior, and the other one is called engine. Okay, so three asset. Okay, simple as that. Three asset. Okay, then next, no residual value are attributable to any of the component part. Okay, so the keyword is no residual value. Okay, so hopefully you remember what we have discussed earlier. No scrap value. So no scrap value means to say this must be straight line method. Okay, right. Then next, at 1st April 2008, right? So of course, let me just fast forward. Do you see the financial year end is 31st March 09, right? This is your financial year end. Then now, at 1st April 08, the aircraft log showed it had flown 10,008 hours since 1st April 05. In the year ended 31st March, aircraft flew for 1,002 for the next month to 30th September, and a further 1,000 hours in the next month to 31st March. Okay, and I tell you, most people, they are confused already for these three sentences. They don't know what the question is about. Okay, so that's the difference between the Westerner and the Asian. We are Asian now. We don't like to see story. To us, we prefer point form. So let me show you what they're trying to say. At 1st April 08, the aircraft shown it have flown 10,008 since 1st April 05. Okay, so I interpret this first sentence for you. Okay, so what this means is this, right? Okay, just give me a second. This is IAS 16, question 1. Flightline. Okay, so just now that sentence, they say at 1st April 2008, the aircraft log show it had flown 10,008 hours since 1st April 2005. Okay, so this is Western style of writing. Asian style, we do it this way, correct? So actually what they are trying to say is from 1st April 2005 to 31st March 2008, the number of hours is 10,800 hours. So that's what they are trying to say. Can see, right? We prefer point form, but to them, they like to write story. Westerners, they like to write everything in paragraph. They don't like point form. Okay, so actually that's what they meant. At 1st April, aircraft log showed it have flown 10,008 hours since 1st April 05. Okay, so from 1st April 05 to 31st March 08, the total hours is 10,008. Okay, so let's continue. Then they say in the year ended, so let me just highlight for you. In the year ended 31st March 09, aircraft flew for 1,002 for the 6 months and another 1,000 hours in the 6 months to 31st March. Okay, so let me interpret for you. In the year ended 31st March 09, right? So year end 31st March 09. Then of course, with that, I also know my accounting period. Right, my accounting period is from 1st April 08 to 31st March 09, correct? Okay, If my year end is 31st March 09, then that will be my accounting period. No problem. Okay. So in the year ended 31st March 09, aircraft flew for 1,002 hours for the 6 months to 30th September. Okay, so first half of the accounting period is 1,002. And a further 1,000 in the 6 months to 31st March. So that's what they are trying to say. They split your accounting period into 2 periods. 6 months, first 6 months, 1,002. Subsequent 6 months, 1,000. Okay, right. So for this second paragraph, right, it looks like this. So what they are trying to tell you is this. From accounting period, 1st April 2008, the first 6 months, 6 months already calculated for you is 30th September. Okay, 30th September 2008. The first 6 months is 1,002. Okay, first 6 months according to the question is 1,002. Then the subsequent 6 months. So subsequent 6 months, of course, must be starting from 1st October 2008 until the end of my financial year end. Right, so which is 31st March 2009. So the subsequent 6 months is 1,000. Okay, right. So that's what they are trying to say for this paragraph. Okay, right. So continue here. So if you continue with the question, on 1st October 2008, the aircraft suffered a bird strike accident which damaged one of the engine beyond repair. Right, then they say this was replaced by a new engine with a life of 36,000. Okay, so first of all, we need to understand this 1st October 08 first. This 1st October 08, first thing, do you see this is the happening day? This is the happening day. Right, the aircraft hit a bird, right? Then of course, leading to some damages. So this is the happening day. And the bad thing is this happening day, right, is in the middle of your accounting period. This is the bad thing. This happening day fall in the middle of your accounting period. It's not at the start, not at the end, it's in the middle of your accounting period. Then of course, this means trouble for us. Right? Trouble, right? If it happened at the start or happened at the end, then easier. But now it happened in the middle. Right? Okay, so happen in the middle. So I will show you what's the implication. Okay, so anyway, I tell you now, if things happen in the middle, you need to calculate the opening balance of the asset. Okay, you always need to calculate the opening balance of the asset. Okay, I will show you soon. Okay, so first thing, suffer a bird strike which damaged one of the engine beyond repair. Okay, so I think they are trying to tell you something here. Damage one of the engine beyond repair. So the keyword is this beyond repair. Right? Okay. So in accounting wise, right? Beyond repair means what? They ask you to do some calculation here. Beyond repair in accounting wise means what? I give you a clue. Start with S. Beyond repair, start with a S. Accounting word SC is my first 2 letters. So what they ask you to do? If they say damage until beyond repair, the accounting word start with SC. Any suggestion? I tell you one more letter. SCR. SCR. Still don't know. SCR. Scrap. Correct. Okay, you need to account for scrap. So scrap is the same as disposal. Nothing special. Scrap means it's the same as your disposal. Normally for disposal is sales proceed compared with carrying value, correct? So for scrap, sales proceed is equal to 0, right? Then you just need to calculate the carrying value. Can scrap, very good. Okay, so this one is I need to account for scrap. So you must know, right? So inside your mind, when you're reading the question, roughly you must have a plan as well. This is scrap. Okay, so one engine, talking about scrap. This was replaced by a new engine, right? So now I have two workings already. One working is scrap. Okay, then the other working is new engine. Replaced by a new engine with a life of 36,000 at a cost of 10.8 million, right? Okay, so 36,000 cost of 10.8 million. So two workings now, one scrap, one new engine. Okay, then next, the other engine was also damaged, but was repaired at a cost of 3 million, right? So this 3 million, of course, the keyword is repair. This one is a part on subsequent measurement. Not subsequent measurement, subsequent expenditure. Okay, so do you remember subsequent expenditure? Repair this 3 million, I give you two choice. Do you think you should expense off or you should capitalize? Repair. Repair is expense off, correct? Okay, so all the things that we have discussed all come and haunt you. So make sure you remember that. So this one is subsequent expenditure. I should expense off. Okay, then however, is remaining useful life or shortened. Do you see? Remaining useful life shortened. Useful life change. This is called change in depreciation estimate. Right? This is called change in depreciation estimate. Okay, so therefore, conclusion, we have completed engine. So for information, if I read the question right, I'm very sure you will know this whole chunk here is for engine, correct? Okay, then this whole chunk here is for exterior. And this whole chunk here is for interior. Okay, so engine, we have already completed. I must do 3 working. Maybe I put it here for you, right? Engine, I have to do 3 workings. Engine. Okay, so try to have a plan. Engine, I need to account for the scrap engine, correct? Then I need to account for the new engine. Then I need to account one engine with a change in depreciation estimate. Okay, so 3 workings for engine. No problem. Okay, so that's engine. Then next, continue reading. The accident also caused cosmetic damage to the exterior, which require a repainting, right? So repainting at a cost of 2 million. So this part is talking about exterior now. So exterior, you have a repainting. So repainting, you need to ask yourself, is there any improvement or no improvement? Right, so the question never state anything, right? So this one must be no improvement. So no improvement, you should expense off. Okay, and lastly is your interior. As the aircraft was out of service for some weeks due to the accident, Frightline took the opportunity to upgrade. So the keyword is upgrade. Hopefully you remember what's upgrade. Means to say there's improvement. Upgrade the cabin facility at a cost of 4.5 million. Okay, then they say this did not increase the estimated life, but improve facility enable Frightline to substantially increase the airfare. Okay, so substantially increase the airfare is evidence of upgrade. Right? So this one, if you remember, is talking about our future economic benefit. Can sell higher. Okay, evidence of upgrade. Future economic benefit. Increase airfare. Okay, so of course, conclusion is this 4.5 million is an upgrade. Okay, so hopefully remember upgrade what you must do. Capitalize and depreciate. Then you need to remember what we have discussed here, right? Okay, so all this will come in already. Right, so just now you have a upgrade, right? Okay, then you need to account for this part. Calculate the carrying value at the of upgrade, etc. Right, so just now there's also one change in depreciation estimate, right? Change in depreciation estimate, then you need to do this. Okay, right, okay, then continue. Okay, no more. So they ask you SOCI, SOFP. So I got three workings, right? Engine, exterior, and interior. So which one you should do first? Okay, now of course I understand now we are Asian. Asian, we have something in common. Our thinking is we want to suffer first, enjoy later. Correct? Asian culture is suffer first, enjoy later. Okay, but this culture, right, don't apply in your exam. Exam, you should do the reverse. Enjoy first, suffer later. Right? Enjoy first, suffer later. In other words, means to say you should do the easiest one first. Which one is the easiest? I hope nobody choose engine. Engine is definitely the hardest, right? So this one I will do last, confirm. Okay, exam always do the easiest one first. In this case, I think I will choose this one, exterior. Okay, can So now we do exterior. Do the easy one first. Okay, so of course, if you want, depends on you, depends on your style. What you want, if you want, you can actually set up a pro forma SOCI and a pro forma SOFP. Okay, stand by first, right? In other words, stand by. Okay, so as spoken, I will do the exterior first because exterior is the easiest one. So exterior, we'll do this one first. Okay, so exterior, what story do we have? Exterior. So if you look at the question, exterior is here. Exterior is we have a 2 million repainting, right? So perhaps I will want to put this 2 million as an expense in my P&L, right? 2 million expense in your P&L, just like that. Okay, so I put here P&L, I will have a repainting 2 million, right? So here I will have a repainting. Expense of exterior. Okay, right. Then next, of course, is to calculate the depreciation and the carrying value. Okay, nothing special. So exterior, no other story, right? So now we will calculate the depreciation and the depreciation and carrying value. So of course we have cost. Then we need to calculate accumulated depreciation. Okay. So when do you buy the exterior? Okay. Look at the question at the top. Exterior structure purchase date 1st April 95. So I bought on 1st April 95. Then I need to calculate depreciation all the way until my financial year end, which is 31st March 09, right? And then that's it, right? Then with that, I'll be able to obtain my carrying value at your financial year end 31st March 09. Okay, so of course, need your help to fill up this for me. Okay, the answers are the information are all there. Okay, so I give you one clue lah. All right, be very careful when you're calculating your depreciation, right? This is not a December year end, right? This is not a December year end. Your year end is 31st March. So your first year of depreciation, right, is 96. Right, you need to calculate 96 to 2009. Okay, your first year of depreciation is not 95, remember, it's 96. Right? Okay. Then the rest is yours. Okay, so cost is from the question, nothing fantastic. Cost is 120,000. Okay, so I put here in thousands. Cost is 120,000. So here that would be 120. Okay, then depreciation, I need to do a calculation. They say 20 years useful life, right? So 20 years useful life, nothing fantastic. I just need to use 120,000 divided by 20 years. Okay, then multiply by how many years, right? So of course, this one depends on your mathematics. Counting years is something I can't help you. From 96 to 09 is how many years? 96 to 09. You can use your finger to help you. Nobody will look at you, don't worry. 96 to 09 is how many years? 14. Very good. Okay. So times 14, just like that. Okay, 120 divided by 20 times 14. I will get 84,000, right? 84,000. Then 120 minus 84 equal 36. Okay. Then with that, of course, I think I've completed the working for exterior. Then I can update my SOCI and my SOFP. Right. So of course I can update two figures. One is depreciation. So depreciation per year, 120 divided by 20 is equal to 6,000. Right. Then my carrying value is 36,000. So I can put it here. Okay. Depreciation for my exterior is 6,000. Okay, then my SOFP carrying value of my exterior, maybe I don't need to put carrying value, I just need to put exterior, is just now was how much? 36. Okay, just like that. So we are done for exterior. Okay, right. So the next one, of course, what we will do, of course, must be interior, right? So interior, look at the story again to remind ourselves. Interior is this part. What's the story about interior? Interior is talking about upgrade, right? So if you remember what you need to do for upgrade, upgrade is you need to know, first thing is calculate the carrying value at the day of upgrade, then add upgrade, calculate depreciation, and you get this value. Okay, now the special thing is this day of upgrade, right? is in the middle of accounting period, remember. Okay, so this upgrade is in the middle of accounting period. So if things happen in the middle of accounting period, right, nothing special. What you need to do is you just need to calculate the opening balance, right? You need to calculate the opening balance, right? Okay, so for this, right, for this, you need to calculate the opening balance. Now we do interior. Okay, we do interior. So as I say, don't worry. If things happen in the middle of your accounting period, what you need to do is just to calculate the opening balance, right? So what we are going to do now is to calculate the opening balance. Our year end is 31st March 29. So opening balance must be 31st March 28, right? Okay, right. Nothing special. Cost. Then accumulated depreciation. Okay, same thing. When do you buy the interior? Interior I bought on 1st April 05. Okay, then two. Okay, opening balance 31st March, not 09, is 08 08. Opening balance. Okay, so I repeat one more time. Why we want to find opening balance? Because the happening day is in the middle of accounting period. That's why I need to find the opening balance. Okay, right. So fill that up. Cost of the interior. Cost of the interior is 25,000. Okay, so 25,000 here. Then calculate your depreciation. Now, depreciation, of course, now is easier, so lesser years. So depreciation, remember, is the same thing. Your first year depreciation start from 06 to 08, right? Because it's not December year end. So 6, 7, 8, 3 years. So straightforward. So here, calculate the depreciation, 25,000 divided by useful life. Interior is 5 years. Okay. Then times 3, right? 6, 7, 8, 3 years. So 5,000 times 3, I will get 15,000. Okay, so what you have just done is to calculate the carrying value at carrying value of the opening balance, right? Which is carrying value at 31st March 08. And the number is 10,000. Okay, right. So ultimately, remember what you want is the carrying value at the day of upgrade. My day of upgrade is 1st October 08, right? My day of upgrade is 1st October 08. Okay, so I can put one line to help you see. I want my carrying value at the date of upgrade. Ultimately, this is what I want, correct? Carrying value at date of upgrade. First October 08. First October 08 also means to say is 30th September 08. Okay, I want this figure. So apparently I have not reached this figure yet because now my carrying value is only until 31st March 08. Can see? Right? I need this figure, but now I still need to continue to depreciate because I only depreciate until 31st March 08. So I continue to depreciate, right? Okay. Depreciate from 1st April 08 all the way until 30th September 08. Like that, continue. Okay, right. So of course you need to calculate the depreciation. So April to September, 6 months, right? 6 months of depreciation. So of course, you can do a shortcut. 25,000 divided by 5 is 1 year, right? So I just need to use 5,000 multiplied by 6 over 12. Or you want, you can put, okay, no, my 6 over 12 doesn't matter. Okay, so this figure, of course, no need to press calculator, is 2005. Okay, then of course, then now I will get my carrying value at date of upgrade. Something that we are familiar with, 7,005. Okay, right. So this is the starting point, correct? Once we calculated carrying value at the upgrade, the next thing is we can just continue with what we need to do is to add the upgrade. Add the upgrade. So the value of the upgrade according to the question is 4.5 million, right? Okay, so I add a 4.5 here. Then if you remember, we will have a total here of 12,000. Okay, then of course we can continue to depreciate. Right, so just now I stopped at 30th September, right? So I continue, depreciate from 1st October 08 until the end of your financial year, 31st March 09. Okay, then of course the depreciation, be very careful. I will not use my cost anymore. I will use this 12,000. Okay, so if you remember the rule is you're supposed to use this 12,000 minus any new scrap value, if any. So there's nothing, right? There's no new scrap value. Then divided by new useful life, if any. In this case, there's no new useful life. So I have to use remaining useful life, right? So how to calculate remaining useful life? Useful life of interior is 5 years. Okay, useful life of interior is 5 years. So how many years has passed? 3.5 years has passed. 3.5 years has passed, right? Okay, so to calculate your remaining useful life, very simple. I just need to use 5, then minus 3.5 years. So after I do that, then that will be remaining years. Okay, then of course, most people will get stuck here. They will just fill in the answer, but be very careful. This is 6 months. So you need to multiply by 6 over 12. Okay, so just do a calculation. 12,000 divided by 1.5, then divided by 2. Right, so I get 4,000. Then that's it. We have our last line, which is the carrying value at our financial year end, 31st March 09. Then we get something called 8,000. Okay, so of course, after you complete the working, you can fill in your SOCI and your SOFT. Right? Okay, so this one I need to show you a little bit. Now, SOCI, can I just ensure we all know? SOCI means accounting period. Can I just write the accounting period for you? Accounting period is from 1st April 08 to 31st March 09. This is the accounting period, 1st April 08 to 31st March 09. No problem. Everybody knows this. Okay. Now, the reason why I emphasize on this is this. My accounting period start on 1st April. Okay. So my depreciation, I also should use the figure starting from 1st April. If you look at your calculation here, 1st April 08 is here. Right? Then end of the financial year is here. So in other words, means to say your depreciation, right? There are two elements, right? One is 2005 and the other one is 4,000. Okay. Depreciation, there are two elements. One is 2005 and one is 4,000. Look at the accounting period, then you understand. Okay. Right. Okay. So nothing special. So here, what I will do is I will put one line called depreciation. And this depreciation, I will call it interior. And this depreciation is made out of two depreciation, 2005 plus 4,000. Okay, so of course I will get 6,005. Okay, then of course you can also fill in your carrying value for your interior. Carrying value is 8,000. Okay, right. So I think we are done for interior. Now is the hardest one, which is the engine. Okay, still have to do it. Cannot say hard, then don't do. So now engine. So remember engine, what are the story? Engine, we have three workings to do, right? The first working is scrap engine, right? Then the other working is change in depreciation estimate. And the last is a new engine. So let's do the scrap first, right? So if you remember scrap is we need to know the loss in scrap. Okay, so we do the scrap first. Working for scrap. Okay, so nothing fantastic. So scrap engine always start with sales proceed. In this case, it's 0 because scrap, right? Then compare with your carrying value at date of scrap. Okay, so your date of scrap is when? Date of scrap is the day of happening day, right? The day of happening day, of course, is your 30th September 09, right? Sorry, first 30th September 08, apology, not 09. Okay, so scrap, nothing. So you just need to calculate this carrying value at your scrap. Then, of course, the answer that we want is this called loss in scrap. So we want this number. Okay, so of course the problem is the carrying value, right? Carrying value. Okay, so again, the date of scrap, 30th September 08 is in the middle of accounting period. Okay, so if you remember what I say just now, I say if things happen in the middle of accounting period, then you need to calculate the opening balance, right? You need to calculate the opening balance. Okay, so of course, what we are going to do now is to calculate the carrying value of the opening balance. Okay, so nothing special. Start with cost. Then you have accumulated depreciation. So remember, we are trying to find the opening balance. My machine I bought on 1st April 05. Then opening balance means 31st March 08, right? Because things happen in the middle of accounting period. Okay, right. So cost of the engine, 2 at 9 million each. So 9 million, in other words. Okay, so 9 million. Then this working 1st April 05 to 31st March 08. Right. Now, look at this period. Hopefully you find it familiar. 1st April 05 to 31st March 08. Is it the same as here? 1st April 05 to 31st March 08. Remember the hours? These are the hours. So that's why the information is there for, right? Okay. So this period is 10,008. Your total flying hours is 36,000. So to calculate depreciation, what you need to do, very simple mathematics. 10,008 divided by 36,000, right? Then multiply by the cost, right? Cost is 9,000. I get 2,007. Okay, then of course now I will get my carrying value, my opening balance carrying value at 31st March 08. $6,003, right? So 6,003 here. Okay, so remember what we want is the carrying value at date of scrap, which is 30th September 09, which we still do not have it. We still must continue to depreciate, right? Okay, the thing that we want is here. Carrying value at 30th September 08. Right, still not enough, so I continue to depreciate. Continue to depreciate, so depreciation from where I stopped, 31st March 08, so continue 1st April 08. Okay, all the way until 30th September 08. Okay, so look at this period, 1st April 08 to 30th September 08. I think we have the data, right? We have the data, 1st April 08 to 30th September. 1st April 08 to 30th September here, right? This one. 1002, right? Data is 1002. So 1002 over 36. Okay, same thing, multiply by 9,000. Right, so 1002 divided by 36, then multiply by 9,000. I will get about 300. Okay, then that's it. We have what we want already, which is the carrying value at the date of scrap. Carrying value at date of scrap is 6,000. Okay, then I can fill that in. Carrying value at date of scrap, something that we want here, correct? Okay, so this is 6,000. Then my loss in scrap, 0 minus 6,000 must be 6,000. Okay, so I think we have completed the working for scrap. We can update our SOCI and this balance sheet. Okay, so now scrap, of course, two things you can upgrade. You can update. One, of course, is the loss in scrap of 6,000. Right, loss in scrap of 6,000. So loss in scrap, of course, will appear in your SOCI. Okay, then for the depreciation part, be very careful. Depreciation, your engine depreciation is a long working. So I put it here for you. Depreciation for your engine is a long depreciation. Okay, so remember your accounting period start from 1st April 08 to 31st March 09. This is your accounting period. So your depreciation, anything that fall within this period must be included. Okay, so 1st April 08, look at your answer, right? You have one part which is relating to this accounting period, 1st April 08, right? So you have a 300 here. Okay, 300, 1st April 08. This is within your accounting period. So here I will put 300. I put a bracket here. This one a bit long. 300. Okay, so this 300, I'll tell you the source is coming from the scrap engine. Okay, right. Then of course for your SOFP, there's no more balance left, so there's nothing here. No need to write anything, right? Because scrap means throw away already, disappear, right? So no more balance left. Okay, then next we will do the other engine, which is the change in depreciation estimate. Right, change in depreciation estimate. So look at the facts again to see the data. Right, okay. Change in depreciation estimate data from here. These are the data, change in depreciation estimate. So you see there's a free mark of 3 million. 3 million is an expense, right? Maybe I put this one first. Okay, don't waste the free mark. 3 million expense of here. Repair. Okay, engine. 3 million. Okay, right. Okay, so there's only data, then it's a change in depreciation estimate. So the change in depreciation estimate, change on which day? Change on the happening day. So do you see the happening day is actually the same as your scrap, right? They have the same happening day. So change in depreciation estimate, the first time is you need your carrying value at date of change. Okay, can so here now is change in depreciation estimate. Okay, so I put out the date for you. The date is the same, 30th September 08. Okay, so actually we already done that working. We have already done the working, which is here, right? The same working here. This is the working, right? So what I'm going to do, of course, I'm just going to cut and paste. Okay, then don't worry, I'll give you some time to copy the thing. This is the same working that we have done, right? The same working, right? Okay, so I'm going to paste here. I'll give you some time to copy if you want to copy, right? Okay, so this is the first thing that we need to do. Calculate the carrying value at the date of change, which is something like that. Okay, I'll give you 1 minute if you want to copy down. Okay, right. So that's the starting point. We have the carrying value at the day of change. Then remember what I need to do. Then we continue to depreciate. We continue to depreciate from 1st October 08 to your year end, 31st March 09. Okay, so remember what has changed. Be very careful. Right. So this period, firstly, you need to see how many hours they have, 1st October to 31st March 09, right? This period, how many hours? 1st April, or rather 1st October 08 to 31st March 09 is this period, correct? 1,000 hours, can you see? This period is 1,000 hours, right? 1st October 08 to 31st March 09, 1,000 hours. Right, so they mentioned the hours now change to what? Change to 15,000, right? Okay, so what I need to do is this. This period is 1,000 hours, but now change to 15,000. All right, okay, then of course I multiply by this 6,000. Okay, right, then of course I do a calculation. 1,000 divided by 15,000, 10 times 6,000, I will get something called 400. Okay, 400 here, and then that's it. We can have our carrying value at 31st March 09. Okay, So 6,000 minus 400, 5,006. Okay, so I think we have completed the working for change in depreciation estimate. Same thing, you can update your SOCI and your SOFP. SOCI, remember, follow accounting period. So accounting period start from 1st April 08, also means to say there are two elements to your depreciation. Two elements. First is here. Second is here. Right? So in short, your depreciation is from 1st April 08 all the way until 31st March 09. Okay, so two things to update. One is, of course, is your depreciation, and the other one is your carrying value of 5,006. Okay, so let me just update the SOCI first. SOCI depreciation 300 plus 400. Okay, so I put here. Plus 300 plus 400. Okay, so these two comes from change in depreciation estimate working. Okay, then of course, we also have one engine in your balance sheet. Okay, so engine, again, there's a bracket. The first one is 5,006. And 5,006 come from change in depreciation estimate. Okay, right. So once this is done, then we can do the last one. The last one is the new engine, right? New engine, the last working for the engine, new engine. Put it here lah. Should be okay. Right, new engine now. So new engine, I think no complication, should be quite easy. New engine, cost, depreciation, carrying value at 31st March 09. Right, so depreciation, when did I buy the new engine? I bought the new engine on the happening day, 1st October 08 until 31st March 09. Okay, right. So hopefully you can find the numbers. Numbers are all in the question. So the new engine costs how much? Right, okay, so search for the new engine, cost 10.8 million, right? Can find here, just in case you can't find. Okay, 10.8 million. Let me just draw a circle for you. Here, 10.8, right? Okay, here, 10.8 million. Okay, so let's continue. So 10.8. Then calculate depreciation. 1st October 08 to 31st March 09 is the, I think is this one, right? 1st October 08 to 31st March 09, 1,000 hours, right? Okay. 1000 divided by the total machine hours. So the new engine total hours is 36,000. Okay, then multiply by this 10,800. Okay, so you get about 300, and then that's it. 10,500. Okay, then you can update your SOCI and your SOFP, right? So SOCI, I only have one number, depreciation, 300. Then SOFP, I have one number, 10,500. Okay, so let's update. Here, plus 300. So 300 is the last one called new engine. Okay, then that's it. I can close my bracket. That's the depreciation for all my engine. So 600, 1,000, 1,003, right? So depreciation for engine is 1,003. And also you can put in your last carrying value for your engine, which is 10,005. This is your new engine. Right, so 5,006 plus 10,005, I will get 16,100. Okay, right. 1, 2, 3, 4, 5, 6. Okay, so all is here. So that's the question on Flightline. Hopefully you survive. This question is not really that easy because of the things happening in the middle of accounting period. Okay, so of course, what we're going to do now, of course, is to have our lunch. Okay, so we will have our lunch. Please come back 1 hour later. Right, come back 1 hour later. Okay, so I see you later.